Investing and trading might seem like a numbers game from the outside, but once you're in it, you quickly realize that the most difficult part has nothing to do with charts, indicators, or economic reports. It's you. It's your emotions. You're not a machine. You don't run on pure logic. You have fear, greed, doubt, hope, ego, frustration, and all of that gets dragged into every decision the moment real money is on the line. The goal is not to eliminate those emotions, because you can't, and trying to do so just leads to more resistance. The goal is to learn to recognize them, sit with them, and regulate them so they don't control you. Emotional regulation is one of the most important and overlooked skills in the world of trading. It's not talked about enough because it's not glamorous, but without it, even the best strategy falls apart. Fear and greed are the big ones. Fear shows up in so many ways. Fear of missing out, fear of being wrong, fear of looking foolish, fear of losing money, fear of regret, fear of pain. You'll feel it when you hesitate to take a trade that fits your plan, then beat yourself up for missing it. You'll feel it when you buy the top because everyone else seems to be making money and you don't want to miss out. You'll feel it when you sell the bottom because you just can't take the pressure of watching the market drop any further. And sometimes you'll feel it after a loss when your ego is bruised, especially if you've tied your identity to being a good trader or you've told people how successful you are. And that loss suddenly becomes more than a financial hit. It becomes a personal wound. Greed shows up differently, but it's just as dangerous. It's the reason people overtrade, jumping in and out of the market constantly, thinking more trades equal more chances to win. It's what pushes people to use massive leverage, 50x, 100x. It's what drives revenge trading. When you take a loss, and instead of stepping back, you try to win it back immediately. Not from a place of logic, but from a desperate need to erase the emotional pain. Greed also leads to impatience. You take trades that don't meet your criteria because you're bored, or because it feels like you should be making money every single day. You stay in trades too long because you want to catch the absolute top or bottom, trying to squeeze every last drop from the move. That's when people ignore their stop loss, even remove it entirely, thinking just a bit more until the market turns and wipes them out. And all the while, the market doesn't care. It doesn't care who you are, how smart you are, how badly you want it, or how hard you've worked. It moves based on the collective flow of money, and a huge part of that flow is influenced by market makers, professionals and institutions who understand human psychology better than most retail traders understand their own emotions. They know exactly where retail traders put their stop losses, usually just below support or just above resistance, and they design price movements to trigger them. They manufacture fake-outs. They push prices in one direction to create FOMO, or the fear of missing out, then reverse them suddenly to trap people on the wrong side. And because most people are trading emotionally and impulsively, they fall right into it. Even if you have technical tools, Fibonacci levels, trend lines, support, resistance, indicators, so does everyone else. And that's the point. When everyone sees the same levels, the stops tend to collect in the same places. Market makers hunt that liquidity. They know where you're most vulnerable, not just on the chart, but emotionally. That's why having a clear, tested, detailed strategy is essential. If you know exactly what conditions must be met before you enter a trade, you reduce impulse. If you have your risk clearly defined and your exit strategy locked in before you even enter, you reduce uncertainty. If you know when you'll walk away and when you'll scale in, you reduce the losses. But a strategy isn't enough on its own. You also need patience. Real patience. The kind that lets you wait for your setup, like a sniper high up on a building, not charging in like a foot soldier. A sniper waits, observes, calculates, doesn't fire unless the target is in range and the shot is clean. And if the setup never comes, they don't force it. They stay still. That's trading. You wait for your setup. You prepare your exit. And when the moment comes, you act with confidence. Not because you're guaranteed to win, but the probability is on your side and because you're emotionally ready to lose. Because losing is part of the game. If you can't lose well, you won't last. You need to learn how to lose without spiraling, without chasing, without revenge. Just take the loss, review it, learn from it, and move on. And that's where journaling comes in. One of the most powerful tools a trader can use is a reflective journal, not just to track trades, but to track your mind, what you were thinking, what you were feeling, what your body was doing, what pressure you were under. Did you follow your plan? Did you rush in? Were you calm or tense or distracted? Over time, your journal becomes a mirror. It shows you patterns in yourself, and it helps you shift your focus away from obsessing over profits and toward refining your process. The traders who succeed long-term aren't the ones who win every day. They're the ones who show up, learn, adapt, reflect, and evolve. They build systems. They master themselves. They rest when they need to rest. They regulate their nervous systems through mindfulness, walks, breaks, exercise, whatever works. And they treat trading not like a lottery ticket, but like a craft. Most people put enormous pressure on themselves to make money fast, to get rich, to escape their job, to provide for their family, to finally feel successful. That pressure makes every trade feel heavy. And when it goes wrong, the emotional weight is brutal. But if you can shift your mindset from needing to win right now to learning to play the long game, everything changes. It's not about never feeling fear or greed. It's about learning how to feel everything and still follow your plan. Because the real edge in trading isn't found in some indicator or some strategy no one else knows. It's found in your ability to stay calm, focused, disciplined, and aware, while everyone else is getting tossed around by their emotions. The market doesn't reward panic. It rewards preparation. And when you learn to trust your process, master your emotions, and remain patient, that's when you stop gambling and start trading. And if you're wondering how to actually manage your emotions in the moment and over time, don't worry. That's a full video in itself, which you will find on my channel. Thank you for watching. Please like and subscribe for more content.